As we transition through the second half of 2024, the de-dollarization movement, the global monetary policy, and the high-stakes US presidential election, they are clearly emerging as three of the biggest and most profitable macro themes of the current financial climate that we find ourselves in right now. This, in return, it is fueling one of the greatest wealth creation opportunities that we have seen. It is presenting savvy traders with a magnitude of highly lucrative back-to-back money-making opportunities. That's exactly why a long list of the world's most powerful Wall Street banks, from Goldman Sachs to JP Morgan to Bank of America, they have dubbed the current economic climate as the golden age of trading. And guess what? This week it's all about one thing and one thing only. It's all about macroeconomics, with a trio of the world's big three central banks due to announce interest rate decisions in a whirlwind 32-hour window. This 32-hour sequence of global monetary policy setting, that's going to span from Tokyo and Washington on Wednesday over to London on Thursday, which will ultimately determine the tone for the second half of 2024. This week, traders' attention that will firmly be focused on the outcome of the Federal Reserve, the Bank of England, and the Bank of Japan's monetary policy decisions, each which face a different challenge relating to inflation, employment, and economic growth. Taking front and center stage this week, that will be the Federal Reserve, especially as expectations they're running high. The Fed could be on the verge of announcing their first rate cut. Ever since the Federal Reserve, they signaled that the rate rising phase of its historic fight against inflation was over. Attention has been focused on when and how quickly the US central bank they will lower interest rates from their current 23-year high of 5.25% to 5.5%. The answer to this burning question that will come from the hotly awaited FOMC monetary policy meeting on Wednesday. While the Federal Reserve, they're widely expected to keep interest rates on hold again, two influential Fed policy makers, they have highlighted their support for a rate cut in the coming months despite opposition from Donald Trump, who says a pre-election shift in borrowing costs that would strengthen the opposition party's chances ahead of a high-stakes November presidential race. Federal Reserve Governor Christopher Waller, one of the central bank's most influential voices, and John Williams, who's the president of the New York Fed, they've both said that rate cuts from the central bank they will soon be appropriate following improved inflation data and fresh signs that the labour market it is cooling off. The Federal Reserve, they have kept their benchmark policy rate unchanged since last July, but traders have significantly increased bets that the Federal Reserve they will cut borrowing costs by a quarter point twice before the end of 2024. According to our proprietary data, one of those rate cuts it is likely to come from the FOMC September rate decision, which will be the Fed's final policy meeting before the presidential election on November the 5th. Elsewhere, the Bank of England they have held rates at a 16-year high of 5.25% since August of last year, but our proprietary data that signals that the UK central bank they will begin cutting rates at its monetary policy meeting this Thursday. An August cut that would put the Bank of England ahead of the Federal Reserve, which is expected to lower interest rates in September, but behind the European Central Bank, they made their first rate cut in June. Should the Bank of England follow in the footsteps of the ECB this week and break away from its long-standing tradition of being amongst the last to move to one of the first, this could potentially mark the beginning of a new era for macro traders. The big question is, will the Bank of England cut rates before the Federal Reserve? Only time will tell. However, one thing we do know for certain, a rate cut is a rate cut, especially when it involves one of the big three central banks. In fact, the world's most influential Wall Street banks, they've already started pricing in rate cuts later this year, with extremely bullish calls for gold prices to hit multiple record highs in the second half of 2024. In a recent note, JP Morgan and Goldman Sachs, they advised their clients to begin rotating into precious metals, ready for a massive uptick in the months ahead. Additionally, traders, they're also starting to shift their attention to silver on rising expectations that the next breakout to new record highs in the second half of 2024 that could be silver. Our proprietary data, it shows that 2024 It marks the fifth consecutive year of a silver shortage, with this year in particular being one of the most intense on record. Historically, half of the demand for silver that has been industrial, and the remaining half that has predominantly been investment related. However, in recent years, the balance has shifted in favor of industrial demand, which currently accounts for 64% of the total global demand for silver. So, put another way, that's a massive increase of 119% from a year ago. The major catalyst behind the historic squeeze in silver supply that includes the green energy transition, with solar energy playing a pivotal role alongside unprecedented demand for artificial intelligence and the EV sectors, which are undoubtedly three of the fastest and biggest growing industries in the world today. Worsening supply and demand dynamics, they have sent silver prices on a parabolic run since October of last year, rallying from just under $20 an ounce to a 12-year high of $32.50 per ounce just last month. Extraordinary times, they do create extraordinary opportunities, and right now, as traders, we are living in some of the most exciting and rewarding times ever in history. Citadel, which is one of the world's largest commodity trading firms, they have made more than $4 billion of profit from commodities, and we're only 6 months into the year. In fact, with everything that is currently unfolding on the global macro front, 2024, it is now officially on track to be one of the Gold and Silver Club's biggest and most profitable years in our 14-year history. Our clients have already made in excess of 6, 7, and 8-figure returns, and we're only halfway through 2024. To put that another way, the majority of our clients at the Gold and Silver Club, they've already made more money in the last 6 months than they made in the entire 12 months of last year. What we're seeing right now, it is nothing short of extraordinary. It's times like these that make millionaires and billionaires out of regular people. Whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action. Right now, you have an opportunity to make the second half of 2024 your biggest and best yet, which, based on our research, it is going to be another blockbuster period due to all the current macroeconomic events that are currently unfolding. Definitely do not underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now. Here at the Gold and Silver Club, we're consistently banking over 10,000 points profit per month, which we have been transparently documenting through our weekly videos. If you're trading at one lot, that's $100,000, or if you're trading at 10 lots, that's $1 million. As you can see from our testimonials, the majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They have already made in excess of 6, 7, and 8-figure returns, and we're only 6 months into the year. If you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, but you still want to make 2024 your best ever, then go to jointhegoldandsilverclub.com now to learn how our mentorship program can take your trading to the next level. Time is the most valuable commodity that we have. Make sure that you don't waste it. So with that, let's move over to the charts. We'll talk you through exactly what we're looking at here as we head into a new week. Firstly, let's get right over to Palladium. So as discussed last week, big buy opportunities here on Palladium, below $900 per ounce. In fact, right now you've got Palladium trading back above $903 per ounce. We added again last week at $880 per ounce. As you know, at the beginning of last week, we were stacking into the position. We banked a quick 500 points on the breakout, back to $930 per ounce, rinse and repeat. Reloaded the position again on the break back down towards $880 per ounce. I like Palladium, obviously below $900 per ounce, back down towards the price swing lows. We've taken the opportunity to stack multiple trades on this market on the recent sell-off. Every trade that we have on Palladium is currently in profit. Now, alongside that, as we talked you through WTI crude oil, we took the opportunity to sell short at $83.30 per barrel and $82.75 per barrel. One of those trades last week, we increased the amount banked to 700 points. We're still remaining in both of those two sell shorts on this market. Obviously, right now, oil is under pressure. It gapped lower the previous week. Since then, it hasn't come back up to fill the gap. We remain in our positions here on the sell side. Every single trade that we have on crude oil, it is protected here. So if we were to get more downward pressure, I'm looking to scale out more profit. Equally though, if we get a break back down towards the swing lows, I'm also looking to reload as low as possible, especially given the amount of news items that we've got over the course of this week, particularly Wednesday's FOMC, Thursday's Bank of England, and of course Friday's non-farm payroll data. Now, alongside that, as I mentioned last week, other setups that I like, platinum alongside palladium here. So platinum back down towards 940 US dollars per ounce. It came back, retook out the previous swing lows, which we discussed with you previously. If we were to get a break back below the price swing lows, this would be an attractive opportunity on here. Look for best possible price. At the moment, platinum is trading back at 958 US dollars per ounce. Out of the two, I prefer palladium at the moment, which is up 1% on the day. We've stacked into multiple trades here on palladium, but platinum is the same setup. Now, silver and gold here, as discussed previously, they do remain range bound. Now, silver, we discussed with you the previous week that the overall positioning from speculators in the market, they were at a point where they're very vulnerable to get flushed out. We absolutely saw that. So in the middle of last week here, silver took out the prior lows here. It broke all the way back down towards $27.50 per ounce. Again here on Monday, it's still under pressure. So many traders FOMO'd in, late longs got into the market, getting very excited when it broke back out towards 12-year highs. They FOMO'd in, they bought really high, and normally they need to get punished for doing so. The market will punish the late longs, the FOMO traders, it will liquidate them, and then it will slingshot the market higher. Now, it might be enough here on gold and silver, the sell-off that we've seen over the last week here. Again, if you have a look at gold, for example, it's dropped by over 1,300 points just within the matter of a week. It might be enough to have flushed out those late longs, the FOMO traders, and then send it higher into the FOMC or into the Bank of England or into the Bank of Japan interest rate decisions over this week. It might be enough to see the next move higher, but absolutely what we discussed with you previously has played out, that it was just a chop fest and you wanted to be very careful because the overall positioning was very heavy on the long side and very likely you're going to see a flush out before the market then sends higher. So I'm liking the setups now that I'm seeing develop in both of these markets. Again, just keep your eye on the dollar as well, which is starting to make the move. It's back at 104.40. If the dollar wants to rip here, that is likely going to put more pressure on commodities here, where we could look to swoop in at even better prices, particularly on crude oil. Ideally, we get a break back down towards the price swing lows, and that will offer some fantastic opportunities for reloading. Again, right now, every single oil trade that we have on, it is protected, and we remain in our sell shorts, which are currently up over 1,000 points in profit on the sell side. And of course, whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second replacement income, or just to earn a better return on your savings, now is the time to take action. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions. Most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds 99% of retail traders back from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that do not work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven trading approach, or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis, outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already stacked up massively against you. If you want to change your results, you have to change your thinking. If you want to learn our exclusive research-driven trading approach that is never taught to retail traders, only reserved for professional traders in the banks and hedge funds with access to powerful game-changing insights, including where the banks and hedge funds where they're buying and selling in real time, alongside the key liquidity zones, so you can enter and exit the markets with pinpoint precision. Further compound that with the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, and quarterly real-time data-driven cycle and intermarket correlations. Then you need to join our mentorship program. Right now, we are in one of the greatest eras of wealth creation that we have seen. If you want to successfully capitalize on these huge money making opportunities ahead and build significant life changing wealth, there's no better time than now. If you want to upgrade your income, you have to upgrade your skills. Never underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will get in touch ASAP.